Good morning. This is Bloomberg Daybreak Europe. I'm Ibiden in London, and these are the stories that set your agenda. South Korea investigates its worst ever civil air accident. Officials focus on a bird strike and landing gear as they try to find the cause of the Jeju air crash that killed 179 people. Asian stocks snap a 5-day gain as investors trim positions heading into an uncertain 2025. Japan holds its last trading day for the year. And former US President Jimmy Carter dies at his home, aged 100. January the 9th has been designated a national day of mourning. Well, checking in on these markets on the penultimate day of trading for 2024. You are looking at futures pointing lower on both sides of the pond this morning. You've seen quite the tech sell-off on Friday, but of course it is in the context of massive gains for the Magnificent Seven across the scope of 2024. As we flip over to the cross-asset picture, you've got the 10-year US Treasury yield pretty steady this morning. 4.61% is where we trade at the moment. It's near the highest level since May, climbed last week, of course, but could that weigh on shares later in today's session? Euro dollar at a 104 handle. We await Spanish CPI later, potentially reading as we look towards the euro area number next week on inflation. Oil pretty steady at $74 a barrel, continuing to monitor the developments in the Middle East and passing that outlook for 2025. And Bitcoin trading at $93,000, a touch lower than that 100K mark that it, of course, has managed to surpass. But flipping over to the Asian picture, you've got the MSCI Asia Pacific Index down 0.33% at the moment, snapping that 5-day gain that we have seen, but still heading for a successful year. Today, as I say, the last day of trading for Japanese markets, and the Nikkei 225 down 0.8%. Gains over in China, and the yen also pretty steady at 157 per dollar. But let's go to South Korea now, which is expected to launch special inspections of Boeing 737-800 planes operating in the country after Sunday's airline crash, which killed 179 people. The accident is the deadliest passenger airline disaster in South Korea and also among the worst globally this decade. Bloomberg's Asia aviation reporter Danny Lee joins me now for more details. Danny, just tell us what the latest is on this investigation. As I say, they are looking into the impact of a bird strike.
Yeah, the bird strike, a mayday call, and potentially a landing gear failure. See, it's all really to see whether all three of these factors, or one of these, or a cascade of these factors, had an influence on the country's worst ever crash here. And so, as you said, there's a lot going on to try and understand what happened, and the authorities are taking a precautionary step to try and investigate and check all other 737-800 aircraft in the country. But for anyone outside of the country, out in Asia and even in Europe and elsewhere, I don't believe that there is a systemic risk here to this type of aircraft involved, which is a very popular kind of aircraft, over 4,000 of these operating around the world. And so investigators are trying to get to grips with what happened here, and we'll know more in the coming days and weeks, but this will very much be a slow process.
But Danny, does it seem like the standard aviation guidelines were in place here?
It does remain to be seen because of the kind of spectacular nature in which this crash was actually filmed. And as we saw footage play out across the internet of this plane barely sliding without its undercarriage deployed at high impact speed into a wall and effectively exploding. So it does remain to be seen what could be at fault here, whether it could be from the bird strike itself to the plane or even the pilots involved. But clearly, given this has happened, it's still, a rare blight on the aviation industry overall, given the fact that overall aviation and the safety of flying shouldn't really be called into question. Flying does remain one of the most safest forms of transport out there.
And yet, interesting that another Jeju aircraft was found to have a problem with the landing gear today. Those shares at their lowest on record, I saw earlier in this morning's session. Have we heard from the airline?
Yeah, the airline did confirm that it had another aircraft this morning on Monday develop a landing gear issue, and so the authorities are also investigating that. But clearly the focus on Jeju Air, which for itself encountering its first ever fatal aviation disaster, there'll be so much focus on this airline, inevitably, whether there'll be another mid-air incident or otherwise. So, yeah, understandably, there is a lot of scrutiny around this airline.
OK, Bloomberg Daybreak aviation reporter Danny Lee, we thank you. Well, of course, the backdrop to the tragic plane crash is the political situation in South Korea, and investigators are seeking a warrant to arrest President Yoon Suk-yeol after he failed to appear for questioning for the third time over his martial law declaration. If it's granted, Yoon could become the first president in the country's history to be arrested while in office. Finance Minister Choi Sang-mok is currently the interim leader after acting President Han Duck-soo was also impeached, deepening that political crisis. It comes as the MSCI Asia Pacific Index snapped a 5-day gain, with investors trimming positions amid uncertainty as we head into 2025. So for the market's view, let's go now to Bloomberg MLive strategist Mark Cranfield, who joins me now. Mark, good morning to you. I've seen Korean assets in particular having a tough period off the back of all of this. What's going on there?
Yeah, it's not just a political crisis, although that obviously isn't helping as well. If you look back, actually, the Korean equity market especially has really been underperforming since the middle of the year. And what started to happen was that people were losing confidence that the Korean companies were keeping up to speed on AI developments, particularly in comparison to their competitor peers in Taiwan. So if you look at what's happened, the Taiwanese stock index, which is obviously powered by big companies like Taiwan Semiconductor, that's heading for something like a 30% gain this year, while the KOSDAQ, which is the tech equivalent in Korea, is heading for something like a 20% loss. That's an incredible divergence. We haven't seen that kind of difference between Korea and Taiwan for many, many years. And that already started to happen way before the political crisis started to evolve in Korea. And once they called the martial law and the fallout with one president and another president being impeached on top of that, obviously foreign investors have really been very shaken by those events, and they've been withdrawing money pretty quickly. And as your chart showed there, it's not just the Korean equities, the Korean currency, the bond market as well. People have been withdrawing from all of those, even though the Bank of Korea surprised people with an interest rate cut when they weren't expected to earlier this month. So you put all those things together, and it really is a very difficult situation going into next year. The best that people can hope for really is that there's a lot of bad news is already priced into Korean assets. And by the time people have got fresh money to deploy, the political situation may start to resolve itself, and money may look at Korea as just being really so relatively cheap compared to its Asian peers that money might start to flow back in there. But it's not going to happen immediately. It really needs to see the political process settle down quickly, and then foreign investors may be a little bit keener on throwing money back into Korea.
OK, so things can maybe only get better for Korean assets. But meanwhile, is it the case that things could only get worse for US assets as we head into 2025, when things have been so strong this year?
A lot will have to do with how the Federal Reserve plays out. And clearly, they've given some very strong signals that the central bank is probably going to hold policy unchanged at its first meeting in January, after providing a series of interest rate cuts going into the end of this year. So really, how long the Federal Reserve holds back, and what is their view on the inflationary impact of the policies we expect to come from Donald Trump once he becomes president. So that will play very heavily into the sentiment as far as US equities are concerned. We've got this people talking about US exceptionism. US assets have been out, the US dollar's been outperforming, equities have been performing well, and bonds actually have held up pretty well, considering the fact there's been such a fluctuation in terms of the economy doing so strongly and inflation starting to stabilize as well. So you put all that together, and it's a difficult story to continue for that much longer. Exceptionalism needs a lot of momentum to keep on going. You need the big companies to continue to produce outstanding profits. The US dollar has to stay very strong, and the Federal Reserve needs to be accommodative. It doesn't look as though all of those things are going to continue much beyond the first part of the year. Probably at least until the inauguration of President Trump, people will probably continue with the same themes. once we start to see exactly what policies he puts in place and how foreign countries respond, how the Europeans respond, how China respond to any tariffs that may be imposed on them, then things could start to change quite a lot. So the idea that American equities and the US dollar really are bulletproof is going to be severely tested, probably within the first quarter of next year.
All right, Bloomberg's M-Live strategist Mark Cranfield with a look ahead to 2025. We thank you. Good to see you, Mark. And let's now look ahead to this week. It's a quiet one. As I say, volumes are thin. But today we get Spanish CPI data. That'll be interesting, given it's one of the first Eurozone countries to publish that preliminary December data. We'll get, of course, the Euro area full figure next week. Then tomorrow we've got China's official PMIs as we get the Caixin manufacturing PMI on Thursday. And then also on Thursday, we get a bit of US eco data in the form of jobless claims. And maybe we'll get a bit of commentary on that from the Fed's Thomas Barkin when he speaks on Friday. But let's stay in the US. January the 9th has been designated as a national day of mourning for former President Jimmy Carter, who died at his home in Georgia, aged 100. The one-time peanut farmer leaves a legacy of promoting human rights and peace after a single term in office that faced challenges including soaring inflation and a hostage crisis in Iran. The longest-living former US president will receive a state funeral in Washington, though the date for that has not yet been announced.
Yeah. America and the world, in my view, lost a remarkable leader. What I find extraordinary about Jimmy Carter, though, is that millions of people all around the world, all over the world, feel they lost a friend as well, even though they never met him. And that's because Jimmy Carter lived a life measured not by words, but by his deeds.
Well, for more, let's bring in Bloomberg's Kriti Gupta. Kriti, a remarkable life in and after office. And, of course, we're about to have a new president. So what lessons can we learn from Jimmy Carter's presidency?
Well, so many of the things that arguably plagued and also were successes of Carter's presidency are the very issues that Donald Trump and Joe Biden are dealing with in the present day. I'll just give you a quick rundown of some of the things that he accomplished. Most famously, the Camp David Accords between Israel and Egypt. We know that's an ongoing concern right now in the Middle East. But he was one of the first to facilitate that kind of peace. The idea that he actually got Egypt, one of the first Arab countries in the region, to acknowledge Israel's right to exist in exchange for some of the kind of areas around surrounding the border, et cetera, areas that are still super crucial in terms of the peace deal kind of being negotiated in Gaza, the ceasefire that's a part of it, Egypt, a key part of those conversations. A lot of that dates back to Carter's legacy as well. He's also talking about the Panama Canal. This is something that Donald Trump has talked about quite lately in terms of bringing back some of that control. The Panama Canal was actually handed over under Carter's presidency, or at least the discussions were during Carter's presidency, back to Panama from American control. That's something that Donald Trump has threatened to reverse as well. So a lot of these questions are crucial, but for a financial audience, it's important to keep in mind he was dealing with extreme inflation, very, very high cost of living, oil prices that were surging. And he really tried to deal with it by, one, installing Paul Volcker as the Fed chair, famously trying to hit inflation right on the head there. It also arguably cost him his presidency. It's all about the economy. People were really suffering during that era. And from an economic standpoint, in retrospect, he did a lot to bring down those costs. But in the moment, of course, a very unpopular president at the time and one of the few one-term presidents we've had.
Yeah, and given that he only had one term, when we think about his legacy, do we think, therefore, more about what he did after he left office?
I think that's the crucial bit as well. The Carter Center in Georgia is kind of his key shining piece that he wants to be remembered for. In addition, domestically, some of the things he talked about, he, of course, had a lot of very strong feelings towards the likes of Habitat for Humanity, which is a kind of project that started in the United States where people go and physically build houses for the homeless. And he took that international in addition to kind of creating it larger in his hometown or his home state of Georgia. He did a lot in terms of things like tackling diseases around the world and various other things, getting vaccines to children. But of course, when you look at his political standpoint and you look at his kind of thoughts, Iran, Russia, a lot of the comments that he had around those have also led into the commentary around things like his Nobel Peace Prize. So on the one hand, politically, he's had kind of a hit or miss record, but his humanitarian legacy is, I think, what he'd like to be remembered for.
All right, and a remarkable life. It's really great to be able to reflect on it with you, Kriti. Bloomberg's Kriti Gupta there. But coming up, a crucial gas deal keeping Europe warm this winter. Is it a critical turning point? We're going to bring you the latest next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Slovakia is urging the European Commission to address the looming halt of Russian gas supplies through Ukraine, saying that the economic impact on the EU will far outweigh the effect on Russia. Ukrainian President Volodymyr Zelensky is set to block Russian gas flows through his country from January. And we can get more now from our Bloomberg senior reporter, Henry Mayer, who joins me now. Henry, good morning. What are the possible compromises? And, I mean, how serious would a failure to reach an agreement be?
Well, there are two possible routes they could go. One, which has been spoken about, is the gas would be transferred to foreign ownership, so in other words, Slovakia and Hungary, when it crossed the border between Russia and Ukraine. So this would allow, Ukraine to say that it is not transiting Russian gas. That's one option. Another one is for these two countries to buy gas from Azerbaijan, and there would be a swap arrangement whereby Russia would sell its own gas to Azerbaijan. But, these are just, at the moment, hypothetical possibilities. We don't know whether they will be able to agree on this or not. And regarding the second part of your question... Yes, just turning to, you mentioned, what would be the consequences? Well, I mean, what you have to remember here is that, Europe used to import 40% of its gas from Russia. That figure has now gone down to 8%. So clearly the impact is far less than it would have been prior to the war. However, for these two countries, Slovakia gets 90% of its gas from Russia. Hungary gets almost 50%. For them, for those two countries, this will have a very serious impact.
OK, and then just in terms of the prospects of a Ukraine ceasefire in 2025, of course, Donald Trump inching towards office again on January the 20th. He said he wants to bring the war to a rapid end. Russia's rejected a ceasefire. How likely is it that the two sides can end the fighting in 2025?
There's certainly going to be no quick end to the fighting. I mean, that's made clear by the Russian statement you just referred to. They are willing to start negotiations. I think the negotiations will begin early in the new year, as soon as Trump takes office. But they're going to be very, very tough bargaining ahead. Russia has two main demands, which are very difficult for Ukraine to swallow. The first one is that they must renounce their ambition to join NATO. And the second one, agree to very strict limits on the size of its military. So I think what we're going to see is a very long and protracted period of negotiations during which the fighting will continue, and probably Russia will continue to make gradual progress on the battlefield.
OK, Bloomberg senior reporter Henry Mayer, we thank you for that update as we look ahead to the future of the war in Ukraine in 2025. But staying with Russia's international relations, of course, we talked about South Korea's tragic plane crash. There's also been the Azerbaijan Airlines passenger plane crash as well. Azeri President Ilham Aliyev saying that Russia accidentally shot down the Azerbaijan Airlines passenger plane, which crashed last week. It killed 38 people. Aliyev told state TV that Moscow should take responsibility. And his statement came a day after a phone call with Russian President Vladimir Putin, who apologised for the incident without saying that his government had been at fault. And in other news this morning, Syria's de facto leader says it could take up to 4 years to hold elections. Speaking to Saudi television network Al Arabiya, Ahmed al-Shara says that he plans to dissolve his Islamist group Hayat Tahrir al-Sham, which led the insurgency that overthrew President Bashar al-Assad. Al-Shara says that it'll take time for Syria's different forces to hold political dialogue, as well as to rewrite the country's constitution. And elsewhere, President-elect Donald Trump has thrust himself into the high-stakes fight over the fate of TikTok in the US. He's urging the Supreme Court to pause a law that would ban the social media platform unless it's sold by its Chinese parent company. Trump told justices that they should give him the time to resolve the dispute, since he only possesses the consummate deal-making expertise, electoral mandate and the political will to negotiate a resolution. Well, those are some of your top stories this morning. But coming up on Bloomberg Daybreak Europe, European leaders are bracing for the impact of potential Trump tariffs, as well as domestic political upheaval. We're going to dive into the outlook for European politics in 2025 next. This is Bloomberg. Welcome back. Now, Britain's ruling Labour Party would lose nearly 200 seats if elections were held today. This is according to a new poll in the Sunday Times, with the surging support for the UK populist Reform UK party weighing on the government. Analysis conducted by the More in Common think tank showed that Labour would cede the majority it won in July's elections when it amassed 411 seats. The Labour government has faced various challenges since taking power in the summer, including a backlash against its first budget. And Vodafone says its merger with Three will unlock investment in Britain's telecommunications network. The £15 billion deal will create Britain's largest telecoms operator by revenue. The Vodafone chief executive, Margherita Della Valle, spoke to Tom Mackenzie after the deal's approval earlier this month.
This is not about revenues. The rationale of the merger is to unlock investment, infrastructure investment. With the combination between Vodafone and Three, we unlock scale in our networks, which is what will allow us to build the biggest, the best network in the UK, reaching 99% of the UK population. That's what we do for a living. We want to invest. We want to invest to give a better service to our customers, and we want to invest to drive growth in our markets, which is where revenues come from. But the most important point for the financial setup of Vodafone is that all the markets in which Vodafone will operate next year, including the UK, will be growth markets where our own scale will allow us to drive growth with good returns.
Yeah, and you focused on that investment piece, £11 billion of investment. When does that investment start, Margherita, and how will you be financing it?
It starts as soon as we complete. We still have a few weeks to go as we go apply the final legal touches with the CMA and our partners. We will complete in H1 2025. And as soon as we complete, we will start investing, which is why, although typically big infrastructure projects take time, our customers will already see the benefit into next year of a bigger, better, broader network. In terms of funding, you know that the other activity we have done this year as part of the reshaping of Vodafone in Europe is to reshape our balance sheet. So we have all the funding we need to execute on our plan.
Specifically for Vodafone, as you look for those synergies, but also that investment, what does that do for headcount in the years ahead?
This is something we will be working on with our partners as soon as we are allowed to complete. In the grand scheme of things, think about it as small, as the impact of the merger. Of course, to give you an example, there will be duplication in the heads offices, but they have nothing in comparison to the investment plan that we have in mind.
So that was the Vodafone Chief Executive, Margherita Della Valle. We're going to have plenty more coming up on Bloomberg Daybreak Europe, so do stay with us. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. South Korea investigates its worst ever civil air accident. Officials focus on a bird strike and landing gear as they try to find the cause of the Jeju air crash that killed 179 people. Analysis of the black boxes will begin today. Asian stocks snap a 5-day gain as investors trim positions heading into an uncertain 2025. Japan holds its last trading day for the year. And former US President Jimmy Carter dies at his home, age 100. January 9th has been designated a national day of mourning. Well, a very good morning. Welcome to the penultimate day of trading for 2024. For most markets, you've got thin volumes, as you might expect, and futures are pointing lower on both sides of the Atlantic. We did have that quite a big tech sell-off on Friday, but that, of course, in the context of massive gains for the Magnificent Seven across 2024. If we flip over to the cross-asset picture, you've got the 10-year US Treasury yield lower 2 basis points at 4.6% currently, but it is near the highest level since May, climbing last week, potentially going to weigh on shares in today's session. Euro-dollar currently trading at a 104 handle, again, pretty steady as we await that Spanish CPI reading later this morning, expected to come in at the highest since July. Oil trading at $74 a barrel. As I say, it's quiet end-of-year trading, but the market's very much focused on the outlook for 2025, also monitoring developments in the Middle East, of course, and Bitcoin trading there at $93,000, so much lower than that 100K mark that it did manage to surpass earlier in the year. Just finally, flipping over to Asia markets, let's get a check on those as well. The MSCI Asia Pacific Index down about 0.33%, so snapping the 5-day gain, but still heading for a successful year. The Nikkei 225 is currently down nearly a full percent this morning on its last day. The CSI 300 up 0.6%, and the yen is currently pretty steady, trading at 157 per dollar. But let's go to European politics now. We've got, of course, an election coming in Germany, ongoing political instability in France, and the third year of Russia's war in Ukraine. Just some of the geopolitical challenges looming for the continent in 2025. For a look ahead, let's bring in Bloomberg's Oliver Crook to look towards that political outlook for the continent. Ollie, you're going to be busy next year. I wonder, how are the polls looking when we think about this election in Germany?
Yeah, so listen, Lizzie, we just had this sort of a Bundestag officially dissolved, which really paves the way for what we expected in terms of the timeline, which is the election on February the 23rd. The president did that just a few days ago. And now when we look at that and we're looking into the polls, what we're seeing is a reflection of what we've seen in the last few weeks going into this election, which is the CDU, the CSU alliance, led by Friedrich Merz, really leading in the polls at about 31% in the last poll that we've got from INSA. But then in the second position, you have the AfD, the Alternative for Deutschland, that's holding about 20% of the vote, followed then by the SPD, Scholz's party, to sort of end up in third place, and then sort of trailing that, the Greens. What becomes interesting now is that although you had this sort of election due to instability and a coalition that really just couldn't get along, you seem to have a situation where you're obviously going to have another coalition governing in the sort of country. And the sort of difficulty that you have this time around for the mainstream parties is that the AfD, the Alternative for Deutschland, a party that the entire political establishment in Germany has boycotted, has refused to work with, is now the second party in Germany, has about 20% of the vote. And to make things even spicier, Lizzie, we've had, Elon Musk was not content to just wade into American politics, but also into German politics, doubling down this weekend, putting out an editorial in the Welt and Sonnendag, saying that the AfD, even though it is described as a far right, represents a political realism that resonates with many Germans who feel that their concerns are ignored by the establishment. It addresses the problem of the day without the political correctness that often obscures the truth. And just to sort of put a little bit of context as to why this sort of matters so much in Germany, the AfD, it's a very fraught issue for many Germans here. This actually led to the resignation of the newspaper's editorial head on the opinion columns because they put this out. We had Friedrich Merz, the leader of the CDU, for his part, coming out after these sort of remarks by Elon Musk, saying that I cannot remember a comparable case of interference in the election campaign of a friendly country in the history of Western democracies. And again, when you look at sort of the AfD and what they are sort of proposing, there is obviously the very hard line on immigration. That is the sort of thing that has been adopted more and more by the CDU in the mainstream. But they want to withdraw Germany from the Eurozone. They want to exit the EU. These are some of the ideas that they're sort of campaigning on. So at a moment when you have a very sort of fractured political establishment in Germany, where it's certainly going to have a coalition, when you have about a fifth of the vote going to a party that wants to leave the Eurozone, hardly sort of bodes well for the sort of EU and the European project going into 2025.
I mean, you hint at it, Ollie, but immigration, therefore, clearly going to be a theme in European politics as we head into 2025. What else is going to be on the agenda across the continent?
Yeah, so listen, Lizzie, I think that we would be remiss. I mean, it seems that everything is coming down to the budget these days because, of course, Germany and France and sort of broader Europe, growth is very, very slow. And that is making very, very difficult decisions to be made in terms of trade-offs for governments. And that is leading, as we have seen at the very core of Europe, to the collapse, yes, of the German government first, but then, the French government repeatedly. We're seeing it over and over again. They can't agree on a budget because the growth and the money is just not there. Add to that the Trump presidency, which is looming on January the 20th. What are we going to get in terms of tariffs? We sort of got a little bit of hints from that from Trump a couple of weeks ago. He really wants the Europeans to buy more oil and gas from the United States. But that bears obviously massively not just on the economy, but also the other conflicts, with whether it's in Ukraine, whether it's in Syria. You have this sort of position now where Syria is a major political issue for the Europeans because it prompted so much immigration over the last sort of decade or so. And the question is, as Trump has said, he does not want to be involved in reconstruction. He does not want to be involved in Syria. This is yet another thing for the Europeans to pick up, to say nothing of some of the other sort of strange things we've been seeing in terms of election interference in Georgia and Romania, to say nothing, Lizzie, of undersea cables being cut, it seems, every sort of week. What you need right now is a unified, strong Europe. What you have is something very, very sort of different from that. I think the hope for the Europeans is that you get some kind of decisive outcome here in Germany, where you have Germany sort of in a position really coming from strength. But as we have enumerated, there's some obstacles to that really coming to be the case.
All right, Bloomberg's Oliver Crook in Berlin. We thank you for that look ahead to 2025. As you mentioned, immigration, a huge issue for Europe in 2025, but also fiscal constraints. And adding to that is low productivity, as well as that failure to invest, leading to vast amounts of lost growth in the EU. France and Germany in political crisis, the continent risking more lost years of stagnation. That's been the subject of our Bloomberg Originals documentary.
The news for Europe just keeps getting worse.
The French government collapses, plunging EU's second largest economy into turmoil.
France's political upheaval in December offered another glimpse at fractious European affairs.
Germany's under pressure and Volkswagen workers are striking hard.
In my view, we are already in a crisis mood.
Our former model is over. If we follow our classical agenda, we will be out of the market, I have no doubt.
The EU's economy is now fighting for survival and struggling to keep pace with the US and China.
Had the European economy grown as fast as the American economy over the past couple of decades, we'd be generating 3 trillion euros of extra income every year.
That's roughly the equivalent to the total GDP of France being routinely added into the economy.
Europe needs to have a digital era economy with companies that challenge those from China and from the US.
Without that, the region's at risk of being unable to afford to protect itself in a world where security is no longer guaranteed.
It's just a very tense moment for the world, and Europe's at the center of it.
You can watch the full Bloomberg Originals documentary on YouTube and on our website. To one of our other top interviews now, the CEO of Lucid Motors has told Bloomberg that the company's new EV has a range of 450 miles, a touch higher than its initial estimate. Tom McKenzie spoke to Peter Rawlinson on his plans to increase production for a 2026 mass market launch and how they're addressing supply chain challenges.
We're not here just to make high-end luxury cars. This is a complete misunderstanding. We're here to advance technology which will benefit all mankind, and the way we're doing that is addressing the fundamental big-ticket item of building an electric car for a family, and that is the cost of the battery. And that's a function of how big that battery is. Because Lucid's technology enables us to go further with less batteries, it means that we can do a competitive range with much less batteries than the competition, and that will drive the cost down. And that is our commercial advantage. Our technology advantage leads to a profound commercial advantage. So it's always been the plan. We do air and gravity first, and then comes the big one, mid-size, which is scheduled for start of production late 26. And we're readying a factory in Saudi Arabia for 150,000 capacity as we speak, and we'll put that both into Saudi and into Arizona.
Okay, so the mid-size is the mass market proposition.
Absolutely.
For Lucid.
Yes.
Do you think you can get it out before Rivian comes through with the R2? That's also scheduled for 2026.
Yes. I'm not sure what their timeline looks like. Well, let's see. Bring it on.
Given the slowdown in EV adoption, that we're seeing in Europe and the US. Would you consider a hybrid powertrain at any point for Lucid?
Not for us, no. We're fully committed. I think that battery electric is the right solution. I think hybrids are the worst of all worlds, and I think that hydrogen fuel cells is just a dumb solution.
And would you consider at any point a partner in this auto market to share costs, to share intellectual property? Is that something that's been discussed that you would ever consider?
I would welcome that. I mean, we've already got the partnership with Aston Martin. We're supplying Aston Martin's electric future for their hypercars with our Sapphire technology, and we're in talks at the moment with a couple of OEs for such partnerships. And it would be lovely if we could supply technology to a traditional car company to help them on their way to sustainability, and perhaps we can leverage economies of scale with their parts bin and other aspects of the business, yes.
Any conversations along those lines?
Yes, absolutely. We're having those conversations.
So that was the Lucid Motors CEO, Peter Rawlinson. Turning now to the tech sector, Ibiden, the Japanese supplier of chip package substrates used in semiconductors made by NVIDIA, has said that it may need to increase production capacity in order to keep up with demand. Their CEO, Koji Kawashima, told us exclusively that sales are robust as his company builds a new factory in central Japan.
Right now, we are receiving more orders than we have capacity for, and we have not been able to cover all of them. We are planning on starting a new factory next year, but it is likely that it will only be able to contribute from the second half of the year. Since demand is expected to increase more in the first half of the next year, the major issue is how to support the increased demand during this 9-month. And we are currently making preparations for this at our existing plants. We have a very long relationship with Intel, and we have been doing business with them for about 30 years now. So there is no doubt that Intel is one of our important customers. We will continue to support Intel's recovery.
Well, in other events coming up this week, today we're going to have the Dallas Fed manufacturing activity and pending home sales numbers. Tomorrow, of course, it's New Year's Eve, and we'll also have PMI data readings out of China. And it's the New Year's holiday on Wednesday, with most major stock markets like the US closed. On Thursday, we'll get the manufacturing PMI data from China and the US. And then on Friday, Richmond Fed President Thomas Barkin gives a keynote address to Maryland bankers. So there's still a lot going on, even if it's thin trading volumes. We'll have plenty more coming up on the programme for you, so do stay with us. This is Bloomberg.
Dramatic political comeback, Donald Trump will return to the White House. And if he's going to share the credit for his victory with anyone, it's this guy.
Where is he? Come on up here, Elon. Come here.
Elon Musk, known for selling cars, making rockets, became one of the biggest political donors in American history.
This is like a mutually beneficial business arrangement, right? Trump got money and got elected. Musk gets sway over the federal government.
This mutually beneficial arrangement includes a new role for Musk that raises a whole host of potential conflicts.
I think the funniest name is DOGE, the DOGE, Department of Government Efficiency.
Musk wants the federal government to mostly get out of his way. Tesla is a electric car company, and it very much would like the federal government to approve its business in robotaxis, driverless cars.
While pushing for less federal oversight, Musk also stands to gain billions.
Elon Musk owns a major defense contractor. It's called SpaceX. The U.S. government is their most important client. He would like as many more contracts as possible, and would like a president who would say, create a new Mars program and hire him to send the rockets up.
This is Trump 2.0. Like the sort of old rules of conflicts of interest may be out the window here.
Bloomberg's Matt Goldman on the enormous power that Elon Musk could wield over US policy as Donald Trump returns to the White House. And you can catch that full documentary on the terminal on Bloomberg.com and on the Bloomberg Originals YouTube channel. Now, returning to one of our top stories, former US President Jimmy Carter has died at the age of 100 at his home in Plains, Georgia. His term in the White House was marked by significant achievements, including brokering a peace accord between Israel and Egypt, as well as economic turmoil at home. Bloomberg's David Weston takes a look back at his life.
President Carter came to office in the wake of Watergate and Vietnam with a commitment to right the ship of state.
President Carter brought back to government honesty, integrity, and faith in government. He ran as a candidate on a government as good as its people, and he truly did deliver that.
I think President Carter in many ways was ahead of his time in terms of his emphasis, for example, on human rights, in terms of his thinking about alternative energy, in terms of his role in the Middle East peace agreements that he put together. And we all know that his ex-presidency, which has been such a long one, has been graced by remarkable contributions to humanity by former President Carter. I think right now, he is seen very favorably. I'm really happy to see that because he's a very special man.
One of President Carter's biggest challenges was energy in the face of the second Arab oil embargo.
Well, he was president during a very challenging time. As you recall, there was the oil embargo, which drove oil prices up dramatically. That became a catalyst for the highest inflation that we had really since the war, and probably even before that. And so he had to take some very tough fiscal measures. He did appoint Paul Volcker, who, by very much tightening monetary policy, caused a recession, which certainly was not an easy thing for President Carter to run through.
He was the first person to talk about energy and how we had to start looking at renewable energy plans and how our country could invest and incentivize in that area. And I don't know if you remember, but he had a solar panel on the White House, which when he left, President Reagan took down. But he also had fuel mileage standards and, really realized, I think, way before anybody else that we had to start thinking about what climate and what it was doing to our planet.
But as influential as Jimmy Carter was as president, he will be remembered every bit as much for what he did after he left office.
The thing, though, that I think is absolutely most notable about President Carter is we can all debate the relative merits of any individual president's term, but I think it's inarguable that President Carter is the single most impressive, most successful, and most to be admired ex-president in the history of our nation. This is a man who took the responsibilities of being a visible public figure incredibly seriously and was a role model to all of us.
iPhones, the Kindle, Nintendo Switch, even Ring doorbells. Foxconn is making these and more. Assembling the devices mostly in China has allowed the company to build an enormous business, generating nearly $200 billion in revenue last year. But the market for many types of electronics, and particularly smartphones, is maturing. Foxconn wants to move up the value chain to products that generate better profits. AI servers is one area where it's making progress. Sales have risen as Foxconn works with the likes of Nvidia, Microsoft, and Amazon on artificial intelligence infrastructure. Semiconductors is another field with a focus right now mostly on older, less sophisticated chips. At present, these mostly go toward in-house needs, including EVs. This is an additional space where the Taiwanese company wants to compete, with a value proposition similar to what it once told Apple. Foxconn can build part or all of your car in less time and at lower cost.
We believe this contracted and design manufacturing service goes same way as smartphones and laptops. So we will have 40 to 45% market share in the futures.
Goldman Sachs says EV outsourcing could be worth more than $140 billion by the end of the decade.
But with Foxconn still to sign on a major customer, its grandest auto ambitions are yet to be realised.
Well, that was Bloomberg's Annabelle Drewler's behind the wheel there on the ambitions for Hon Hai, the company, of course, best known for assembling iPhone for Apple. Well, let's look back at the year that was for 2024 when it comes to the dollar. It's been a stellar one for the greenback. It's best in nearly a decade. The Bloomberg Dollar Spot Index up 7.4% so far year to date, winning against all the G10 currencies. But this kind of strength pretty normal for this period between a US election and the inauguration. So the big question is whether that is going to last, that strength, past January the 20th. Of course, also feeding into that is the question of what the Fed does in 2025. So if we look ahead for major central banks' outlook for next year, you can see that actually the Fed is at the lower end of cuts. And when you think about who's the most dovish, it's actually the ECB and the RBNZ. But feeding, of course, into what the ECB is going to do will be the inflation picture, and later today we'll get even more of a read on that. We'll get Spanish inflation data, and if we flip over again, you can see maybe that will herald a risk for inflation in Europe. CPI in most regions re-accelerating across the continent, as you can see here. But Bloomberg Terminal users can access these charts and others used throughout the show at GTV Go on your Bloomberg Terminal. Coming up next, the opening trade with Anna Edwards and Kriti Gupta. But that does it for Bloomberg Daybreak Europe. Stay with us. This is Bloomberg.